Hello, today is June 20th, 2020. Let's go over our calls. We looked for the pattern with the early high, and that's it. And Monday's pattern also has the early high. We expected to see a gap and a prompt move outside the day's range, Thursday's range, which we got. We said if the move were down, it could lead to a big drop, but if we gapped up and overtook recent highs, that the low should hold. And we said if the gap up and the move to new highs were not clear and convincing, that it could be a false move. So far at least, all that's worked out, and the expectation is that these lows are going to hold. During the day, we got a sell signal and an ultimate sell signal, and those have both worked. Let's go over the daily pattern. This isn't accurate enough to be part of the MEJT system, but usually when these three bars all close within the range of the reference bar, you don't get too much action. And if you do get action, it tends to reverse. If this is really a false peak, you would like to see us drop earlier than that. If this is lunchtime, at this point you could have expected a return back here, but instead we had this panic sell-off during lunch. This is the time when retail customers on the East Coast can voice their opinions, and a lot of the market makers are having lunch and they aren't there to take the other side of the trade. Here you're dropping all day Friday, an hour and a half to go. It's pretty unlikely that the public is going to start purchasing stock. The only ones who want to buy are the professionals, and they bought. And we'll come to what happened in after hours trading in just a minute. All I know is the expectation is recent lows would hold, and so far, despite all this big drop at the close, these lows held. There were a number of ways to read the pattern. One was that this P wave here in black was complete, and there should be one more move up. The other thing was that there could be another move down. Right now it looks as if the next move is going to be up, and that should complete the pattern and move this over to here. And we're looking for 32.99 around Independence Day weekend. One thing I should add on this chart is that when you're in this is the impulse down, this is the corrective wave up, and these gaps do tend to fill at some time. Now they can fill ahead of time or they can fill after the gap, but it tends to occupy the same space. So this here is a gap. It's been filling, and all the after hours decline did was to complete the filling of the gap. We still have this gap up here we have to fill, and this gap here typically should fill too. We should overtake this high. Doesn't mean you won't go down first. Well, here we had a huge drop which couldn't maintain a close under prior lows. Then this huge rally couldn't maintain a close over prior highs. Here, I'm going to move this over to here. Have another big drop, and you can't close under prior lows. Now, I really can't be certain of how to count this, but what I'm hoping is that this is A, B, C for A, and that's A, B, C here. And if that's the right count, I'm hoping I'm hoping we're going to be A, B, C and hit my 32.99 target, preferably around the Independence Day weekend. All the fibs are very nice if this works. Now, the one time the amateurs have things all to themselves is when the market closes, particularly when the market closes on a Friday. Professionals aren't going to take one side of the trade when there's no one there to take the other side. We have a wall of selling into the close. The principle of the wall, people selling with no pullbacks, no one wants to buy at a time when the professionals aren't in the market, is the same as the principle we saw with the lunchtime drop, that the amateurs want to sell at any price. When the professionals come back in the market, they have a different inclination. Got this great MAC divergence. This is the hallmark of a panic sell-off by the amateurs, and if it is, we should gap up sharply when the market opens Monday. Now, the amateurs still have things to themselves over the weekend, so it doesn't mean you won't drop further. But when we open Monday, I want us to gap up over this close and preferably over this high, which I guess is where? 31.1575. That would mean that all these professionals who were forced to buy when the amateurs want to sell will get all their money back real fast and a lot more. Monday features the early high. Typically it's a negative day, a low in the final hour. If you move sharply higher in the first hour or two, it tends to make the day positive instead, with further gains to come in the days to come. I think Friday's action is typical of panic selling by the public, should be followed by gapping sharply higher at Monday's open. There's no requirement for futures to sell off to continue in the open. There's no requirement for the futures sell off to continue when the market reopens on Sunday night, but I'd like to see it do it. The further down we go, the happier I am, as long as it all recovers by Monday's open. If the call's right, we should clear the highs of the recent consolidation relatively promptly, not necessarily Monday, but I would like to see it Monday. We should rally, hopefully hitting 32.99 cash around Independence Day. Just remember, if I'm wrong, I'll be wrong in spades, and if the call's wrong, it should be clear by the open, and then there's no call. But this looks like a panic sell-off to me, and I look for a sharp reversal higher on Monday. And again, as always, if I'm wrong, it's clear before the open. Don't risk your money, and that's today's call.